Hi students, in the last class or in the last session we saw the problems on the LIFO, okay, last in first out, as well as we saw the problems on the FIFO method, first in first out, okay. So I hope all of you understand that problems, okay. So now in this session we will see the problems on the simple average cost method, okay, simple average cost method. So in this simple average cost method we have to ascertain the calculation of issue rate, okay. So the calculation of issue rate, okay. So we have to ascertain the issue rate of the average, okay, average issue rate we have to ascertain, okay. So now how to ascertain, what's the formula for that? So the formula is total purchase price up to date of issue divided by number of times purchased up to date of issue, okay. So this is the formula to ascertain the issue rate, okay. So ascertain the average issue rate, okay. So the total purchase price up to date of issue, okay. So now for example, so this is this, just see, this is the balance, this is the opening balance, okay. So this is the first purchase, okay. So this is the rupees 2, okay. So this is next one, this is what's the, it is issued, okay, 150 units, okay. So for that purpose we have to ascertain what, so we have to ascertain the issue rate, we have to ascertain, okay. So now how to ascertain, this is the total purchase price up to date of issue, up to date only one time it's a purchased, okay, and purchase price we have to take, so this price we have to take 2 rupees, okay, and number of times purchased up to date of issue, okay. So up to the issue date only one times it's the purchased, okay. So like this, it means 1, okay, so it will be the 1, okay, and so this is rupees 2, okay. Like this we have to ascertain the issue rate of for this 150 units, okay. Now see the problem. So the prepare store ledger accounts under simple average method, okay. So this is the information. So with the help of this information we have to prepare the simple average method statement, okay. So now see on this first, yeah, and you know the format, okay. So as it is, whatever you prepare the format for the LIFO and the FIFO, like this only you have to prepare, just only you have to prepare the working note, okay, to ascertain the issue rate, okay, average issue rate, okay. So now see on 1st January 1968, opening 200 units at rupees 2 rupees, okay, rupees 2, okay. So now see, so this is the issue, this is not the receipts, or this is the not the issue directly, it is the balance, okay. So now see here on date column, on 1st January 1968, so the balance, the opening balance is the 200 quantities at the rate rupees 2, so amount is what, 400, okay. So next, on the next date, just see on 2nd January 1968, issued 150 units, okay. So out of these 200 units we have to issue 150 units, but we don't know the issue rate, okay. We don't know the issue rate, how to issue to the production department, okay. So for that purpose average we have to ascertain, okay. For that purpose we have to prepare the working note, okay. So now see working note number 1 on 2nd January 1968, okay, calculation of issue rate, okay. So now how to calculate the calculation of issue rate, total purchase price up to date of issue, okay, and divided by number of times purchased up to date of issue, okay. So now total purchase price up to date of issue, okay. So now see, this is the issue date and this is the purchase date, okay, or it is the receipt dates, okay. So before the issue only one time it's the purchase, okay, and what's the rate, it is rupees 2, okay. So this 2 rupees, it will be the total purchase price up to date, this is the 2, and number of times purchased up to date, after date it's only one time, it's the issue purchased, okay. So this 2 divided by 1 is equal to 2, okay. At this rupees 2 we have to issue this 150 units, okay. On 2nd January 1968, 150 they are issuing, and the rate is 2, amount is the 300, okay. 150 into 2, it's a 350, okay. So now again we have to maintain the balance, okay. So now how to maintain the balance, out of this 200 quantity we issued 150 units, the remaining was 50 units, okay. The close this on this date, okay. Now see on the next date, just see on 5th January 1968, purchases 100 units at rupees 220, okay. So now see, it is the receipts, okay. On 5 January 1968, 100 units, rate it's a 2.20, the amount is a 250, okay. On this date we have to maintain the balance, okay. Again we have to maintain the balance. Now see the earlier balance is earlier, on the earlier date, on 2nd January 1968, the balance is what's 50, okay. So as it is, we have to carry forward for the next dates. The 50, the rate is 2, amount is 100, and this date the 100 again is taken 100, the rate of 2.20, its amount is 220. Okay, so close it on this date. So next, on the next date, just see, on 7th January 1968 issued 100 units. Okay, what issued 100 units. Now see, issued on 7th. Okay, so 100 units we have to issue, and we have to use the FIFO method. Okay, we have to use the FIFO method. Okay, so first in first out. Okay, from this first lot we taken the 50. Okay, and from the second lot we taken the 50. Okay, the 100 we issued, but on which rate? Okay, the rate is not given. Okay, rate is not given. So for this we have to take this average rate. Okay, we have to take the average rate. Okay, so now how to calculate this average rate? Just see here, on second working note, on 7th January 1968. Okay, the total purchase price up to date of issue. Okay, so now see this, on this date 7th January 1968 up to this issue, there is a 2 times purchased. Okay, so these are the two stocks. Okay, take the purchases prices. Okay, 2 plus 2.20. okay, so now see here, 2.2 2 plus 2.20 divided how many times the purchased? 2 times purchased. Okay, the answer will be the 2.10. okay, so this 2.10 is nothing but the issue rate on this date. Okay, this is the issue rate, 2.10. okay, so this 50 units you have to issue at the rate of 2.50, as well as this 50 units again you have to issue for this 2.10. okay, so the total will be the amount to 105. Okay, so now see, again we have to maintain the balance on this date. So now see, the earlier date there is a 2 lots. Out of this first lot we finished. From this second lots we taken the 50 units, and the 50 units are is it remain as it is. Okay, so take it this 50 units at the rate of 2.20, the amount, total amount will be the 110. Okay, so next, on the next date, just see, on 10th January 1968 purchase 150 units at rupees 2.40. okay, so now see, on this 10th January 1968 50 units purchased at the rate of 2.40, the total amount will be 360. okay, so the earlier date balance is what's 50, just we have to carry forward for this next date. Okay, so just take it as it is, 50 at the rate of 2.20 and 110, and whatever we taken the purchased on this date, just take it as it is balance. Okay, so like this, and the close it. Okay, so now see, on the next date, so on 12th January 1968 issued 100 units. Okay, so now see, on how many sorry, on next date means what, on 12th January. Okay, so now see, on this 12th January again we have to issue the how many units, 100 units. Okay, there are 2 lots are there. Okay, take it for, we are using the FIFO method, first in first out. Okay, so whatever the first lot, take it 50 units, 50, still 50 is required, so take it 50 from this 150. So we taken the 50 units here, but we don't know the issue rate. Okay, so we have to take the average rate of this price of the purchases. Okay, 220 plus 240. okay, so now how many, 2.20 plus 240 divided by 2, you will get the issue rate. Okay, so now see, the working note number 3, on 12th January 1968 2.20 plus 2.4 divided by 2, the answer will be the 2.30. okay, 2.30, just see here, 2.30 at the rate of 2.30 you have to issue this 50 units as well as this 50 units, the total amount will be the 115. okay, so again we have to maintain the balance on this date. So the earlier date balance is what, 50 plus 50 as well as 150. okay, out of this first lots we issued all that. So out of this 150 we taken the 50 units, the remaining will be the 100 as it is. Okay, so at the rate of 2.40, and the amount will be the 2, total amount will be the 240. okay, close it on this date. On the next date, just see, on 20th January 1968 purchase 100 units at the rate rupees 2.80. okay, so now see, again it's purchased on 20th January 1968. So 100 units at the rate of 2.80 and 280. Okay, so again we have to maintain the balance. Now see, on the earlier date there are only one lot. Okay, so this balance, so balance we have to carry forward for the next date. So just take it as it is, and you have to add this new purchases 100 at the rate of 2.80. It's a 280. Okay, so next, on the next date, on 28th January 1968, issued 200 units. Okay, so now see, so on this 28th we have to issue 200 units. Okay, so the balance, there are two lots are theirs. Okay, out of these two lots we have to issue the 100 units. Okay, so first 100 take it as it is, as well as 100 required, the 100 stock is there, so take it as it is 100 this also, but we don't know the rate to issue. Okay, so for that purpose you have to take the average. Okay, you have to take the average of these two. Okay, 2.40 plus 2.80 divided by 2, you will get the answer 2.60. Okay, so now see, working on number 4, on 28th January 1968, 2.40 plus 2.80 divided by 2, the answer is 2.60. With the help of this 2.60 you have to issue that 200 units. Okay, so this first 100, this 200, second 100, the at the rate of 2.60, the total amount will be the 260 and the 260. Okay, so again we have to maintain the balance. There is a no balance. Okay, there is a no stock remained. Okay, so now see, one more note is given in the problem. Just see here, note, on 31st January 1968, received back 15 units from job issued on 2nd January 1968. Okay, so now see, whatever we issued on this date, 150 units, out of this 150 units, 15 units are back to the store departments. Okay, so to store departments is in the receipts. Okay, so now return 15 15 units at the rate of 2, because on this rate we issued 2 rupees 2. Okay, so this 2, out of this 150 units they return how many units? 15 units they return to the store. Okay, at the rate of 2, the total amount is there 30. Okay, so on this date the balance is what? 15 units at the rate of 2, the total amount is the 30. Okay, so like this we have to solve the problem. Okay, so I hope you will be the understand. Okay, so thank you.